Yeah, morning, Tracy. We're just seeing US cash markets close for the session, and we are looking ahead into the Asian trading session ahead. I think if you look at the news that we've had to contend with and navigate through the session, we've seen a raft of Fed speakers playing through. Obviously, Jerome Powell's interview on 60 Minutes, still very much prevalent in the market's thought process. We saw an ISM services number coming out at 53.4, showing good expansion in services once again. That came out topside, driven partly by the prices paid, which was a bit of a concern. But on a more positive note, we did see new order subcomponent showing good expansion playing through as well. That's obviously very supportive of the US dollar and the sell-off we've been seeing in the rates complex. We did see a senior loan officers survey coming out later in the trading session. This is the SLOOS report, which gets a bit of attention these days, especially given what we've been seeing in the moves in regional banks of late. But I think this is somewhat positive, and it's certainly conducive of higher for longer stance from the Federal Reserve. We did see 14.5% of respondents of banks coming out and saying they're seeing tighter lending standards playing through. Now, that is a lower rate from the prior quarterly read at 33.9, and we are seeing a bit of a pickup in expected demand for loans coming forward, driven by lower interest rates. And so we'd say that's probably conducive of a higher for longer stance. Now, if we have a look at the wash up in the market process and what we need to know for the Asian session ahead, I think for fixed income, there's been a decent sell-off playing through, certainly in the belly of the curve. We're seeing 7-year treasuries up 15 basis points, 10-year treasuries, which are getting a bit of attention, up 14 basis points, currently trading with a yield of 4.16%. The session high has been 4.17, so we're not a million miles away from that session highs. And we do look up at recent highs of 4.19, which we got onto the 19th of January as a potential breakout place. We are seeing a bit of a bear steepening of the 2/10 curves. Yields on the front end are up, but not by what we're seeing at the long end. We can see 10-year real rates trading at 190s, so they have broken out. The rate of change has picked up, and that is supportive of the US dollar as well. Now, if we have a look at rates complex, we can see that March is now priced at 16%. So obviously, a cut is certainly the low probability now for March. I think the Federal Reserve have done a pretty good job of closing the door there. And we can have a look at SOFR spreads and see that there's about 10 basis points being priced out of SOFR for this year as well to stand at 121. We can have a look at spreads relative to bunds, and you see 10-year yields trading about 7 basis points higher in terms of the premium blowing out there to 185 relative to German bunds, and that has put downside pressure in euro dollar. We've seen euro dollar trade down to 107.23, which marries the lows that we saw on the 8th of December. We hit that level pretty much to the T, and we've seen a few buyers playing through on that point. The dollar index, as a result of that, has pushed into sort of 105. We're up about 60 basis points on the trading session. And that move that we've been seeing in yields in the US, and certainly the blowout in spreads relative to other G10 counterparts, has seen the US dollar outperform pretty much every currency in G10, and certainly in the EM space as well, bar the Mexican peso as well. Certainly the rate-sensitive currencies such as the Stocky has underperformed, and we can see dollar Stocky having a nice move. The US dollar's appreciated nicely against the NOK and also the South African rand. And I think if you look at our flows as well, we've seen good interest in dollar yen up to the recent breakout. And cable's been well traded down to 125.19. So we've broken that 128, 126 range firmly in place. Now, Aussie dollar has traded down to 64.69. That's going to be very much in focus as we look at the RBA statement later on in the Asian trading session. That comes out at the same time as the statement of monetary policy. And then we'll see Governor Bullock step up about an hour later at 3:30. So that's going to be very interesting indeed. The Aussie dollar probably should revert back to looking at China. Now, China's equity markets are all over the place at the moment. We have a look at the A50 index. That was up 2% yesterday. Some of the mainland large cap indexes are holding in pretty well. And Hong Kong's pretty flat, but it's the small cap indices that we're seeing getting pretty badly beaten up. So, what does the Aussie dollar actually look at? Now, if we have a look at Aussie rates pricing ahead of the day, there's not really anything being priced in for this meeting. Or the subsequent May meeting. Is really when we get down to June, which is priced at 50-50, and August, where we see the first full rate cut being priced in, with 2 rate cuts being priced in by the end of the year. So obviously the statement needs to reflect that rates pricing. Will we see subtle changes playing through? It does suggest that we probably should lose the hawkish bias at the moment, but that rate pricing relative to the tone of the statement is where we're going to get the move. If we have a look at the equity market, we're down very, very smalls in the S&P today. We certainly came nicely off off the lows in the cash market of 49.18. We sort of pushed back to the flat line. Tech seems to be supporting the market where we've got materials under pressure there. We've seen gold price out about 14 bucks. It's down 20.25. A little bit of weakness playing through, and we've got a bit of upside in the crude price, about 70 basis points. So as we look ahead to Asia, we're going to be looking very much at the RBA meeting. As it says at the moment, we've got the ASX call pretty flat on the trading session. We're expecting a little bit of upside on the open for the Hang Seng as well. So it'll be interesting to see how China trades today.